following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 24th. Fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of these markets, what the bulls and the bears, the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now it's not too early. Call on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. So let's go ahead and get this show started on fabulous and fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading off 528 points. He's trading at 17,482. S&P down 67 points, trade at 2047. NASDAQ Composite down 184 points at 47.25. Russell 2000 down 43 points. She's trading 11.28. We've got gold up 56 bucks. 13.19 is what she's printing out there. Silver's up 41 cents. She's trading at 17.76. Light sweet crude back a couple of bucks. Lead the charge here to the upside. Well, you can pick that out. That's going to be the gold miners. The nugget is up $17, about 18%. You've got AutoZone to the upside, up $7. Chesapeake Utilities, otherwise mostly ETFs. To the downside, Priceline taking a big hit today. Looks like pretty decent volume behind that move, 1.9 million shares. We know that had tested the high over the last couple of days. It's traded out at 12.37. Google's about down 24 bucks. Amazon off 25. So where do we begin out here? This could be a great show for you, folks. Stay tuned, because in the next segment, we've got the father of candlestick charting, Mr. Steve Neeson. So he'll be with us. So it's going to be a great lineup today. But where do we start? I think the best place to start is, how do you know where you're going to if you don't know where you're coming from? Now, what the heck does that mean? Well, let's focus in on the UK. We'll come back to the U.S. markets, but let's focus in on the UK, on the FTSE, because if all holy heck is breaking loose in a handbasket, if all holy heck is breaking loose, then let's go see what's really going on in the FTSE. Now, if I go ahead and we take a look at the daily chart, let's start off by taking a look at the daily chart, closing down almost 200 points, well off of the session lows out here. It would look pretty ominous as we take a look at this chart. But the chart that I think is more important, and you can sort of see it, you'll see it here when I put it on my screen, is the weekly chart. Let's take a look at what we'll call an intermediate time frame. So here is the weekly chart for the FTSE. And if you take a look at what the FTSE actually did for this week out here, on a weekly basis, it formed a bullish reversal signal. A bullish reversal signal. An outside week? Yeah, I don't know that the market was really extended when, so we won't call it a key reversal. But take a look. We do know, on the FTSE, we absolutely know where buyers, central banks, whoever it might be, is trying to defend their position out here. If you're watching us on TigerTV, you can see my crosshair. You see on a weekly basis back on August the 28th out there, that nice hammer candle along the low. That hammer candle was taken out just slightly back here in the trading week of February 12th. But then you can see a number of bullish candles out here, including this week and this week's close inside of the FTSE. You probably didn't know that. Right? We've got to make sure whenever you're trading, we always want to take a look at, hey, what's happening one step above us, one step below us out there, to get a better feel for what the market is doing. So the FTSE certainly has not fallen apart. We've seen huge moves in the currency pairs. We've seen the hard currencies and so forth. And that little red line that is on my chart out here, that's priced at 60.99.08. It closed above that. That is important out here. So the FTSE, which really should, if everybody was there, not selling everything inside the FTSE. That's clear when we take a look at the weekly chart out here. Let's go see what else we can figure out is going on in the markets internationally. Let's get our head wrapped around a big picture. Let's look at the currency pairs out here. Great, a lot made about the currency pairs. So we're taking a look at in essence, the three currency pairs U.S. dollar index that really makes up the moves that took place overnight. Take a look at the I'll just explode this panel here. Let's take a look at the Great British Pound. Now, the Great British Pound has been in a descending price channel for years, 2 years, as a matter of fact. The top of that price channel took place back in July of 2014. So the pound, that has nothing to do with Brexit. The pound has been moving lower, has come back and has tested the 2009 lows out here. It's rejected that bottom, by the way. But for goodness sakes, the pound has been moving lower. Everybody will focus on today, but I don't know about you. Look, sometimes 10 minutes from now, I don't remember what I had just done. I'm going to look at a chart. You're going to look at a chart. We're going to look at days and weeks, just like we did on that FTSE. We're not necessarily going to remember, what took place during the week. What was the beginning of the week out here? Well, it's June 24th, right? The weekend of June 24th. We may or may not remember that. But we'll take a look at the candlesticks. We'll take a look at the patterns that were going on, and that will be able to say from our interpretation, because we won't pay attention to the news, because the news for you and I is right in front of us. It is in these chart patterns out here. So guess what? The Great British Pound, even though a big move, and even though it wiped out many people if they weren't using stops out there, it's doing what it has been doing for 2 years now. No great surprise out here. If we take a look at what went on so nothing unusual. My opinion, the way I take a look at it, all price did was went down, touched the bottom of that descending price channel and bounced off of that, as well as a 2009 swing point out here. If you take a look at the euro, traveling sideways. It has been traveling sideways since January of 2015. It's been a year and a half just traveling sideways. So let's not get too caught up in the daily moves up or down inside the U.S. dollar index. It hasn't broken through a consolidation that it's been in for 18 months. The same thing with, that was the euro that I was speaking about, but since I probably mentioned the U.S. dollar index, guess what? The same pattern inside the U.S. dollar index. So whether it's the euro, which makes up, 57% of the U.S. dollar index, so no stranger here that we see nothing but a consolidation. Now, look, you break the consolidation pattern, and then you've got troubles. But otherwise, at this stage, you're kind of in a market where one day, 1 week, it's something for the bulls. The next day, the next week, it's something for the bears out here. It can be a frustrating market to trade out here. And how about that Japanese yen? And look, there were huge movements inside the currency market. No doubt about it. The Japanese yen has been doing a retracement, a much-needed retracement, after going and testing those lows in October or in 2011, right? Huge move from 75 to 125. And all it's doing right now is, for the most part, a relatively orderly pullback into the 0.68 retracement level. I would anticipate 94.78 is where its price target is out there. And how about Goldilocks, right? Let's finish off by taking a look at gold before we go into the breakout here. This is gold priced in 6 different currencies out here. Gold priced in yen, still hasn't broken through resistance. Gold priced in euros, it is trading slightly above resistance. You need about 1,181 euros to buy an ounce today. Gold priced in dollars. Gold priced in a South African rand, that's up at resistance. Gold priced in U.S. dollars right now, up at resistance out here. Very, very interesting. We get back from this break, we're going to go to our man Steve Nissen. We're going to get his take on the S&P 500 and a few other things. So stay tuned. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Now, this is going to be a treat. It's going to be a treat for me. I hope it's a treat for you as well, because we've got a guest on the line with us. His name is Steve Neeson. You might have heard of him, and you should have heard of him because, well, first of all, let me give you a little bit of background, my background on here. And, first, I would never ask you to do something that I wouldn't do. And in my journey for technical analysis, one of the pieces that was really important was understanding how the market was communicating to me. And in fact, I use that each and every day, obviously, when I come to you live. And so I went out and I purchased the book that Steve had published. I got his second edition, Japanese Candlestick Charting Techniques, out there. And then from there, I knew I needed to learn more. And I think it was back in 2006, right around that time period, when he went ahead and automated his candlestick charting tools. It's called the Nissen Candle Scanner. And I use that each and every day. You are the beneficiaries of that. I use it each and every day. I use it for my own personal trading. I use it when we do the shows. It's why I have such conviction. And it was really the piece that was missing from all of the patterns that it is that I trade out there. So it's a real treat. I've never met Steve. This is going to be the first time that we meet each other. And so let's go to Steve. So Steve, thanks for joining me. How you doing this afternoon?
I'm doing fine. Can you hear me okay? I'm using a headset.
We can hear you. We can hear you just fine. So that's wonderful. What a perfect day for you to be able to join us. And we've got a bunch of questions out here, and so I'd like to cover that. Would love for you to tell some folks a little bit more about yourself and the Candle Charts Academy program that you've got. So where would you like to begin? Do you want to begin with telling a little bit more about yourself, or take a look at the S&P 500? It's your choice.
Yeah, let's look at the S&P. Well, let me give a little background. You did such a great job, but very essentially, I was the first to reveal candlesticks to the Western world back in the 1980s, and it's hard to believe, but before my book came out, the one which you got, the second edition, there was not one charting system anywhere in America or Europe that had candlestick charts. Now it's kind of the default charting method. So I really appreciate you letting me come on to increase your listeners and viewers' education on how to use them correctly, because while there's a lot of information out there, a lot of it, unfortunately, is not correct. In fact,
no question. No question.
So, yeah. So
the internet's a great device, but it also can work against you.
Right, exactly. So that's a little bit my background. We'll talk about more about CCA a little bit later on, but let's talk about the S&P
Sure.
first, and then we could talk about currently. But just to show you how the candlesticks really can
And
improve
what
your
time
trading
frame
and
would you
investment.
like? What time frame in the S&P would you like to look at
Let's
first?
do the daily one.
Okay. So we're going to put the daily S&P up on our screen, folks.
Right.
And go ahead, take it away.
Okay. When you, you're going to put it on there? There we go.
It's on, yeah. So it's
Okay.
it's on the screen. You're going to see just a
Right.
slight delay between what you see. So, but you go ahead and talk from your version of the
Right.
chart. It's the same chart. Yeah.
Right. Okay. So a little hard to see. If we, on the right side of the chart, we could expand a little bit more on the right, blow
Yeah.
it up a little bit more.
Yeah, sure. There we go.
Some of the-
All right. So you've got this nice bullish engulfing candle that formed out here on
Right.
June 17th.
So, a
and
little hard to
that's
see.
under attack.
Right. There we go. Perfect. Okay. So notice right where your arrow is over there. It's called a hammer.
Yeah.
Right. We have a hammer there.
May 20th.
A
Yeah.
little,
Yeah.
actually, to the right there. I know there's a little. There we go. It's a little bit of delay. And that's where potential support is. One of the great things about the candlesticks is the shape of the line itself will tell you if the candlestick potentially is bullish or bearish. The hammer comes after a downtrend, and it has a very long, what's called lower shadow, and I'm sure most of your viewers and listeners are familiar with it, and small wheel body at the top end of the trading range. So what that tells us is that the market had sold off by the end of the session, had bounced back. So, I'm looking for potential support down there. To me, that's critical support, because if the market closes under that, we really would have broken out of what the Japanese call a box range, what we in the West call a lateral trading range.
Sure.
For months and months, we've been warning our CounterCharts.com students, and that's one of the advantages of being a member of the free CCA CounterCharts Academy, because we put out alerts all the time. And we had mentioned unless the S&P closes above 2150, we would be defensive. And so, in fact, obviously that's the case. So essentially, if you make a line around 2150, actually around 2120, 2125, you had major resistance there. And so that's the top end of the box range. The bottom end of the box range, where we had multi-test support with the hammer at your red arrow. So this is really critical that we hold that level, because one of the great things about the candlesticks is you definitely should also use Western indicators. The candlesticks are made with open, high, and long close. So anything you do with a traditional Western bar chart, you do with a candlestick chart. And that includes measuring. So in other words, if the market closes decisively under that hammer, that's perfect, great. We could use a traditional Western method and take the height of the box range and subtract that from the breakout area. So if the market does close under the low of the hammer, we would take the height of that range and get a downside target. So that'd be around 2120. So let's kind of round it off to about 2030. So we'd take 90 points from 2030, would get a downside target of 1940. But if we get any bullish candlestick signal anywhere near the low of the hammer, then you have a successful test of support, and then my target would be the top end of the box range. And box range is one of my favorite trading vehicles, because you have a clean stop out level. The lower the hammer should be support, and if it closes under that, if you're long, you're wrong. And we have a target, the top end of the box range.
Absolutely. Now you mentioned the upper portion of the target out here, the resistance level. Were you getting that from a weekly, monthly, or a daily chart? What were you using in order to identify that that top area?
Well, a weekly chart. But what's interesting, if we go back to that daily chart again that we just had on.
Yeah.
There's a shooting star.
Sure. Yeah, on June 8th.
June 8th, right. Okay, I guess you're showing. There we go. And again, this brings out the aspect of the candles. You look at individual lines and see if they're potentially flush. By the way, these lines are picked up with the Nissen Candle Scanner. NCS, Nissen Candle Scanner, has, as you know, my favorite candlestick signal. So this is a great way to pick potential, and I just the word potential, tops and bottoms. So just as the low as the hammer should be support, the high of the shooting star should be resistance. And notice where the market stalled, right at the high of the shooting star. So this brings out another important point. I personally use candlesticks not only for my trading, but for investing, and for my retirement portfolio. So one of the things I've been doing, and actually my son is in the market now also. He's always asking me what I should do, and I've been telling him I would rather wait, and over the last couple of weeks, wait for a close above 21.50 to buy rather than, trying to pick a bottom. I'm a momentum trader, investor. So here we have actually a long-term monthly chart. And one of my favorite rules, I'll tell your listeners and viewers how to apply this, is we had major resistance.
Hey, Steve, can you do me a favor? Could you do us a favor? We're just about to go into a hard break to pay for a commercial. Would you be kind enough to hang on? We'll come back. We'll take a look at the monthly chart for the S&P 500.
Sure. Right.
Oh, that'd be great. All right. This is Steve Rhodes with TFNN with a special guest, Steve Nissen. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're on the line with Steve Nissen of CandleChartsAcademy.com. We're taking a look at the S&P 500 at the monthly chart out here. So, Steve, again, thanks so much for joining us. Go ahead and take her away.
Sure. Okay. So one of the things that I like looking at, especially from an investing perspective or even trading, but when the market breaks a major resistance area, multi-tested resistance, that I call change of polarity, and I came up with the term, but it's a common Western technical strategy, that old resistance should become new support. So when the market broke out of this a multi-year range, I
Yes.
actually added more into my equity portfolio, and my stop-out level was the change of polarity. If the market closed under that older resistance becoming new support, I would say I was wrong. So with that in mind, what I would with the suggesting for longer-term investors, and obviously it's a way based on the action today, but if the market closed above 2150 in the S&P, that resistance area from 2150 to 2120 should be a support area. So the point is you can also trade with momentum based on candles. If the market breaks above a resistance area, you could actually, go along. You're buying at a higher price, but you have the odds more in your favor. So
Sure,
I'm
sure.
going to show you this, chart to show you use all Western technicals as well.
Yeah, and so in this case here, in taking the box theory, what we like to refer to it as on the air here as a consolidation pattern. So the same thing. We just all have maybe some different terminology.
Right.
So in this case here, we know that the measurement of the consolidation, which I put up on the screen, this little kind of rectangular square shape black box area, you're looking at it is so from the daily standpoint, you say there's maybe about 90 points to the upside if you take out that 2150 level. Likewise, you take out the hammer candle on the daily chart, you've got 90 points to the downside.
Exactly. And interesting, that box, because when the market broke above the 1550 level a few years ago, my target was actually 2250.
Yeah.
But we've got a bunch of bearish signals around 2120, so I tweaked that a little bit and said that, okay, we may not get to 2250. It looks like we're having a lot of problems at 2120. And as I mentioned, my son called me a week or two ago. I wanted to know if he should put more money in equities. I said, I'd rather buy at a higher price and be right, have the odds in our favor, rather than trying to buy at resistance.
Sure.
Yeah.
So interesting. During the first segment, I'll put this up here. I was just taking a look at the FTSE, at a weekly chart for the FTSE. It ought to show up on your screen here in a minute. And what I found interesting about the weekly chart, because I wanted to go back to the source.
Now, how do you spell weekly? Is weekly WEAKLY?
No, the weekly chart.
Weekly, right.
Yeah. Well, that's true. That's true. Yeah, that's true. Okay, I just got to get used to your sense of humor. That's perfect. And
well, actually, if you want, speaking of stuff, if you want a rule that works all the time in technical analysis, without exception, there's excellent support at zero. I don't want to get
there you go.
But anyway, go ahead.
Hey, look, I know we've got some traders that are listening to us that want the markets to go down to a zero.
Right.
So, they're on the short side, which after all of the activity, after I haven't really following, what's going on the screen out there, what I like to affectionately call the boob tube, and what's being communicated. You and I, we're taking what is the market communicating to us, and we're taking a look at these different levels of support and resistance and so on. And so I thought it was interesting that with regard to the FTSE, that the actual candle that has formed this week is a bullish candle, which was down testing, several other previous weekly bullish candles, whether it was the August 28th level, whether it's the October 2nd level, really the January 22nd, February 19th. So just as you were suggesting that the S&P 500 has got a ton of resistance at this 2100 area, we could make the same comment, I would think. I'm asking you, can we make the same comment about the FTSE when we take a look at its weekly chart, and that it's got a lot of support down here in this 5,700-ish range?
Exactly. And one of the things I tell our Camel Trust Academy students is that I can tell you where support and resistance is. I can't tell you if it's going to break it or not.
Sure.
So, yes, that is a key support area. So we could use the change of polarity. That means if the market does break under the support, especially on a close and decisively, that old support area should be resistant. So right now, we're still in a box range, that lateral trading environment. Not only do we have a potential, we have a bullish engulfing pattern today, but notice those long upper and lower shadows on today's action. That's called a high wave candle. And what that means is the Japanese will say the market's lost its sense of direction because the upper shadow shows us the market rallied but sold off. The lower shadow shows us the market sold off but then rallied. So it's totally confused, which is not surprising. But as you mentioned, Steve, we are holding a key support area, and if we have a candlestick signal confirming support and resistance, the odds of that signal working out are much, much better than if we just had, say, a bullish engulfing pattern not confirming a support area.
Sure. So a question for you on this FTSE chart here, on the weekly FTSE chart. We've got several different bullish candles down towards the bottom here. And the box range, for the most part, seems to really start off at the lows of the August 28th area. Yeah, we've had some pushes down.
With the
We have
bearish
one
engulfing
close.
pattern. Notice the bearish engulfing pattern. Right after, keep on going to the left.
Yeah. No, I'm just
right,
looking.
so,
I'm,
yep,
I'm looking at. I was looking really at the bottom of,
there you go.
the.
Right. Okay.
Yeah. My question was going to be: would you use the low of the week of August 28th, or would you really use the week of February 12th as the breakdown? So if you get a close below the week of February 12th, that's really your breakdown of the box.
Right. And what I do actually is I would have where you have the bottom part of that rectangle. That would be the beginning of my support area, and the bottom part of my support area would be the low of the bullish engulfing pattern from February. So it's actually a support zone, and we're right in the zone. But as you said, I would use the lowest low as my level. I would say I was wrong if I was.
That's great. And that's really important. That's important for everybody that's in the listening audience out here, because we certainly want to keep one of our eyes, on what's going over in the UK out here. But from a weekly perspective, the FTSE, with regard to at least candlestick signals, looks better than most of our markets. If I just put the Dow Jones up on my screen out here, we don't have anything that shows us with any kind of bullish candle. But Steve, talk to us a little bit about Candle Charts Academy before we have to sign off here.
Sure. Do you have a slide on there, or otherwise I could just do it?
Absolutely. Go right ahead. Yeah, go right ahead.
Right. But essentially, Candle Charts Academy is our resource for general training for all markets, forex education, options information, recorded seminars. We have special topics. We'll be sending out a market update. I'll be going over the forex market and more detail on the S&P and some other equity markets and gold today. So we offer a free membership to Candle Charts Academy, and you just go to candlechartsacademy.com. And as part of the free membership, you get I have a video with my all-time most important trading rules, four common mistakes traders make. So that's a freebie. And you were nice enough to mention NCS and Candle Scanner, Steve. And if anybody's interested in that, we do have a special, what we're calling a Steve Rhodes discount. Did you get the Steve Rhodes discount, Steve, when you bought it?
No, I'm one of your inaugural guys. So, but here's
okay, all right, great.
What people should know is I would only ask that. Look, I can't live without it, and I want to thank you for creating it, and certainly for coming on the air and spending some time with us. I hope that you'll come back from time to time. I know our listeners would love to hear your thoughts as well on the market. So it's really been a pleasure to be with you, and have a great weekend. Thanks so much for doing this.
Great, thanks. Okay.
You bet. It's Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, and a special thanks to Steve Nissen of CandleChartsAcademy.com for joining us. We've got the Dow off 495, S&P is down 62. Now, let's go take a look at what's going on intraday out here. Let me show you the patterns that are in play, because we're going to learn a lot about the market and what its next move is coming into the close. And we're going to do that, as I put in the newsletter this morning here, in essence, the earthquake took place last night. And now what you and I are looking at are the aftershocks. And the aftershocks, as you know, you got little tremors out here. So we're trying to understand, of course, some of those tremors can actually lead into maybe even a bigger earthquake. And that's really how we have to go ahead and take a look at the chart. So we spent some time taking a look at some longer-term charts. Now what we're going to do is go dive down into shorter-term charts. We're going to take a look at a 10-minute chart and a 30-minute chart, because the market patterns that are forming out here are just spectacular, and they go in line with regard to exactly the reason why I use candlesticks as our signal. Kind of like, I take a look at the market is communicating to you and I, so we're understanding that language. Once we understand the different pattern of communication, each of us have a different pattern of communication out there. And what candlesticks are for me is they're the punctuation. They're the commas. They're the explanation. They're the periods out here. So when we take a look at what the Dow did, as an example, you got one of our favorite patterns, right? We have price coming off of last night's move, about an 880-point move or so to the downside. So we have a move, and as price is moving down, it's doing it with less relative strength out here. Now Steve and I talked about the hammer candle. He had one hammer candle on a 10-minute chart, by the way. This is the Dow futures we're looking at. Show up at midnight. Right at midnight, if you were wondering, many people were thinking, hey, where's the plunge protection team? We were inside the den and kind of kidding back and forth about it, but there was a lot of reality there to it. When are they going to show up? Well, we know how to show up. They can't hide. That's the beauty about bulls and bears. And they cannot hide. And they cannot hide if we understand the signs that they make out here. Well, guess what? The market moves a little bit lower, tests the bottom of that hammer candle with another hammer candle at 1240. Again, it's a 10-minute time frame. Price moving lower, forms a nice bullish candle. We get another bullish candle that takes place at 110, and the market starts moving higher. Of course, we've got our nice TAS market profiles out here, brand new box set form. We know that this profile box, because that point of control, blue dashed lines closer to the bottom of the box, we know that that is a bias to the upside. There was no bias to the upside. Well, their last bias to the upside was when things really started to crack, and that was at 9 o'clock last night. That's when things got rocking and rolling. A box that was really formed, that had a bias control to it, bias form to it, failed. and we didn't see another box form until we got down to lows. That's why we utilize each of these tools and each of these patterns, and we pay real close attention to it. So what did that tell us? That told us that price was going to at least get up and test the top of that box, that resistance level out here. Kind of a hidden resistance level, unless you utilize this, unless you're a TFNN user out here. And so price gets up into that 17,331 level. As soon as price broke above that, what that told us, of course, you don't need to be a genius to figure this out, price was going higher. But where was it going to go to? Now, that part, we could have used some retracement levels to try to identify it. More importantly was what was going to happen on a pullback out here. And coming into about 7 o'clock this morning, we had a nice little retracement. What this did was it formed a nice little lightning bolt, a nice little A to B equals CD to the upside out here. Now, the price projection on this, if we go take a look at the ES Mini, which we will, it hit it right to the tick. I believe it was right to the tick. Maybe it was right to the quarter tick out there. But it was really, I think it was dead on. Dead balls accurate, as they say. In this case here, the price projection was 17,631. But look, we use this as a guideline. And as price was getting up at 10:20 this morning to that price range, you had one of those reversal signals form. You had a little dark cloud cover. Said, hey, guess what? I might start raining on you again. And that's, in fact, what the market did. It started raining again and pulling back. So the real question now is what's going to happen? Because what this actually formed, this formed a Gartley buy pattern. Let me go over here to the 30-minute chart because it's a little bit easier for me to show you on this screen here. And I'm going to go ahead and I'm going to switch over and we're going to take a look at the ES Mini. And you can see I'll actually put the patterns on here so you can see, because what it did was it formed a Gartley buy pattern. All confirmed with bullish, bearish signals out here. But here is the A to B equals CD to the upside. I guess it wasn't right to the tick. 20, 60, 50 would have been the 1-to-1 A to B equals CD out here. Again, nice little bearish engulfing candle that formed right here at 10:30. What we also know, maybe this was to the tick. That's right. I knew I was going to get, where was the tick coming from? Well, it's from right here. Good old Leonardo, Fibonacci, DiCaprio. Well, you're not really DiCaprio, but you know what I'm talking about. No, it wasn't even that. It was, well, it must have been a 10-minute chart. But we've got a nice little 0.618, very close to 0.618 Gartley sell pattern that actually formed out here. Now, with any Gartley pattern that forms in the marketplace, what you and I can do is use some Fibonacci tools to try to identify where is price going to pull back to, because this actually is a very large Gartley sell pattern. And every Gartley pattern out here has really 5 different outcomes, right? If we go from and those outcomes being, the first 4 outcomes being our retracements. And that's a retracement of the A to B equals CD pattern. That's from the low then that took place out here at 12:30, 12:40, all the way up to that little doji high at about 10 o'clock this morning out here. And what we can see, the retracement thus far has only been a 0.382 retracement. Kind of interesting. It's 10 minutes to 2, and the retracement on the pullback on this 30-minute chart has been basically negligible. If the market turns from here, and the market takes out 2064.75, price is going to go to the next level. It may form, very likely will form, another A to B equals CD to the upside. You might say, well, where would that take us to? Well, there'd be a couple different A to B equals CD patterns out here to the upside. The conservative one would take us to a price objective all the way up to about 2084 to 2098 out there. That would be the conservative A to B equals CD pattern. Likewise, price can easily continue in this pattern because outcome number 1 has been achieved. Outcome number 2 has not. Outcome number 2 is that it's going to pull back, the ES Mini I'm referring to, would pull back to 2024. Outcome number 3 is 2013 out here. And outcome number 4, it makes a 100% move. It gets back to the lows of last night out here. And, of course, outcome number 5, this is where things get really rocking and rolling to the downside. Because you talk about an A to B leg. Whoops, I grabbed the wrong thing out here. Whether it's the Dow, whether it's the ES Mini, whether it's the NQ, they all have that same potential pattern out here. It's not grabbing it properly, but we're close enough. The downside action on this, if, in fact, that 1999 level gets taken out, well, you're looking at 1945. Now, it doesn't look to me, based on price behavior and pattern behavior, that that's what's going to happen. But folks, after people have time to sleep on things over the weekend, who knows what kind of stuff is going to come out? Who knows what kind of scary stuff is going to be out there? You want to watch. You want to watch that wall. You want to be on that wall. That wall is 1999. If that gets taken out inside the ES Mini, it's curtains to the downside. It's that next level. So how the market trades from here on into the closeout here is going to be very helpful to help us understand what it is doing. The message about what the currencies were doing, like we took a look at that on the long term, a lot of talk about the currencies, and yes, on a daily basis, we saw some gyrations out here. But the reality is there is not anything, not a gosh darn thing that is unusual when we take a look at a weekly chart. And as far as I know, today is Friday. It is fantastic and fabulous Friday, and that means it's the end of the week. And when we take a look at the candles on the weekly chart, for these currency pairs, there's really not much to be scared of. There's nothing to be scared of if you're holding on to euros out here. Pounds, yeah, maybe it's going to go down and test the bottom of that descending price channel. U.S. dollar index, that's at the bottom of its box, maybe ready to head higher. Steve Rhodes from TFNN. We'll be right back.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So just to recap, because we're taking a look at the nice Gartley sell patterns from a intraday standpoint, right? This is where we're trying to determine what the aftershocks, what the message of the aftershocks are presenting to us, how the market trades for the next couple of hours is going to communicate a bunch to us. To the upside, if you see the market trade above 2064, especially if it gets above 2069, the real question is if you're short the market, I think that sphincter muscle will get real really tight out here because you're going to be there. I can only imagine how many folks were trying to jump on this trade to the downside right at the open out here, which was absolutely not the correct move to make because this A to B equals CD pattern was underway. And at this stage here, now, as I say, for the market, a normal pattern, a normal retracement, right, inside any market, so certainly a normal Gartley sell pattern, which is what we have inside the ES Mini out here, whether you're using 10-minute charts, 30-minute charts, or what have you, would be a pullback to 2024. Should have no problem doing that, right? So that's what you're looking for. So if the market trades down to that level, that's not a big deal. If it trades to 2013, that's not a big deal. It's the big deal is if it were to get below 1999. And if it moves to the upside, you can see quite a flurry of the market really pushing higher going into the close out there. So my suggestion to you is we've identified the patterns out here, and just make sure that you've got some stops in place. Let the market tell you what it's going to do. You know about both sides of the trade right now, as well as you've got a pretty decent outlook on what has been working, what isn't working. In fact, if I go overseas, we take a look at what's going on in markets around the globe out here. The Hang Seng, right? The Hang Seng, and I didn't get a chance to do this, but I should have. What I wanted to do is go back to that the Hang Seng when it started falling apart back in April of 2016, even before then, in the Hang Seng and the Shanghai. Yeah, I wanted to go back even before that so we could see what that pattern behavior was. But here's what I'm just looking at, right? We've had a nice rising trend line for the most part in most of the indices. Those have been under attack and many have failed at this stage. This is short term. This is just going back to February. But Hang Seng out here, it scuffed off what was going on over in the UK out here. It's still above its rising trend line out there. Actually, of all the markets that we're looking at right now, that's probably the most bullish out here. You probably didn't expect me to say that, right? If you take a look at the Nikkei, now the Nikkei really had trouble last night. Currency-wise, stock-wise, this thing decided to just let loose all at one time. But in letting loose, all that it's done thus far is go test the February 12th swing point low. It's tested it, it's rejected it. I don't know if there's volume. It's an ominous-looking bar, suggested at least gets tested out here. But thus far, a support area is held inside of the Nikkei. Inside the DAX out here, it's not even gotten down into the February 12th, February 11th area out here. But it's got the tale of two stories out here. It's got both an island top and an island bottom pattern out here. So I don't know what to make of the DAX other than it hasn't exactly fallen apart here. And the FTSE, this is the daily charts, by the way, that we're looking at. On the trading session of June 16th, there was a hammer candle. It was actually a Gartley buy pattern. And that's what's been tested, and that's what held all through the morning out here. So that's what the international markets are communicating to you and I as we speak right now. So the Dow's off 514. What else to look at? We took a look at gold out here. Hey, the last question was, is there an island top inside the New York Stock Exchange? I know there are many other questions out there. We just didn't get to it. But, there's actually were two island tops, right? The first one formed between June 6th and June 9th. It was the session before and after that created that island top, and today we also have another one. But I will tell you that from a weekly perspective, so far the New York Stock Exchange is holding up pretty well. If it closes right here at 10,244, intermediate term is still bullish. Folks, stay tuned. Our man David White is going to be up next. Have a fabulous weekend, fabulous Friday. I'll look forward to seeing you on Marvelous Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.